Brad Williams, Frugal Finance. Let's talk a little bit about consumer debt. This is an FYI. This information is from the Federal Reserve Bank of New York. Question is, what good is this information to you? It's informative. My background's finance with a little bit of economics. So this stuff kind of intrigues me. And mostly the credit card debt. This information is as of first quarter 2024. And in summary, household debt ticks up $17.94 trillion. That's a lot of money. Delinquency rates remain elevated. Total household debt increased by $147 billion to reach nearly $18 trillion. That's US. Average delinquency rates edged up 3.5% of outstanding debt in some stage of delinquency. Mortgage balances rose by $75 billion from the previous quarter to $12.59 trillion at the end of September. While growth in income has outpaced debt, elevated balance levels continue to reveal stress for many households. Comment, let me know. Let me know how much debt, if you're treading water, if you're just making by on a month-to-month basis, and if one or two of the spouse was unemployed, how would that affect you? Now, here's the shocking thing. Credit card balances increased by $24 billion to hit $1.17 trillion. Keep in mind, 1.17 times 0.22%. What's that 22%? That's the average credit card interest rate. And you tell me Visa and MasterCard aren't making a lot of money. Auto loans, they're up there too. They increased by $18 billion to $1.64 trillion. The auto industry is not making a little bit of money on the interest that they charge. HELOC, those are home equity lines of credit, increased to $7 billion to $387 billion. What does this all mean? Well, one or two things. One, we're either consumed with consumption or inflation is just eating us away at our income. And you can see our growth. The growth is there, but so is that debt level. Mortgage balances grew by $75 billion. That's good. We're seeing some growth there, but we're not seeing the inflationary component here. I wish I could. I probably go to Fred, and that's the Federal Reserve in St. Louis, and they probably have an overlay where I could look at total debt to incomes. We're going to see mortgage balances increased, and then we're going to also look at credit card balances up 1.17 trillion, grew by 24 billion, and are 8.1% above the level a year ago. That's a little staggering considering our growth rate. We're using more credit cards than our inflation. Auto balance rose by 18 billion and now stand at 1.64 trillion. Other balances, retail cards and other consumer loans remain elevated with a 2 billion increase. Student loan balances grew by 21 billion, now stand at 1.61 trillion. Total non-housing balances grew by 65 billion. Comment, let me know what you think. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.